everybody, welcome back to Layman Loans. In this video, we're going to see how you can take a personal loan against your credit card. So first of all, you have to know what's a credit card. Credit card is nothing but a plastic card issued by the bank for you to take a credit in the basis of your eligible limit. You can take a cash, there's going to be a limit called as a cash limit, and there will be a credit limit. So assume you are just starting to get a credit card, they'll give you a credit card with about 35,000 or 50,000 credit limit. So that is a maximum limit to which you can take this imaginary loan based on your credit card, and you can possibly purchase items through that credit card. Now, if you are having a cash limit in your credit card, typically it will be about 50% or 40% of your credit limit. So you might possibly be able to take about 10-15,000 rupees as cash limit if you are a beginner in credit card. Then possibly in your 50,000 credit limit, you can take a 15,000 cash and a 35,000 rupees or even up to 50,000 rupees in credit. You can either purchase items for 50,000 or you can withdraw cash through the ATM of the bank up to 15,000. But there is a variable interest component. Typically, credit cards charge about 44 to 48% rate of interest. Credit card interests are sky high, and it is definitely not recommended by us to use credit card on a periodic basis. They'll give you really fancy offers wherein they'll say you need not make the full payment within 30 days, and up to 30 days or even 45 days, there is absolutely zero interest. All these are catchwords and buzzwords which you have to listen very cautiously, because if you're using your credit limit to even 50,000 rupees, your next month bill generated will ask you for a minimum amount due. What is a minimum amount due? It will be only 5% of the total outstanding due. Assume you purchase something for 50,000 rupees, they'll ask you to pay only about 2,500 rupees or 3,000 rupees inclusive of the interest, and the total outstanding due will be 50,000. Even if you have 50,000, you will be tempted to pay the 2,500 or 3,000 rupees only. Then typically this entire 50,000 will be considered as the principal outstanding, and you will be actually asked to pay the interest component of 45 to 50% interest on the total outstanding due, and you will only be paying minimum outstanding due. Even if you keep paying for 2-3 years, the principal will remain the same. You would have actually paid up around 30,000 rupees per annum by the end of the year, or within 2 years you would have actually paid the entire principal whatever you have taken, but still your principal will be the same. You would have actually paid only the interest component. Unlike this sort of an arrangement wherein the interest rates are so high, most of the banks give a credit card linked personal loan, which will be a relatively less interest rate. They'll give you a personal loan based on your credit history and your repayment track record. So today, if you're going to get a credit card, you cannot apply for a personal loan tomorrow. You can possibly apply for a personal loan maybe after 3 or 6 months time, wherein the bank will know your overall repayment pattern, and if you have never defaulted on your credit card bills and you've always paid your amounts on time, whatever you've used up, you've been paying up properly, then the bank themselves will come and give you a pre-approved personal loan based on your credit card, or sometimes you can go and apply for a personal loan as well. This personal loan rate of interest will be somewhere around 17 to 20%, which is almost half or even lesser than that of an actual credit card. So the personal loan which you are getting will be credited to your bank account, and you will have to be paying a regular EMI for the personal loan. This is a lot better than the credit card outstanding due, wherein you pay a minimum amount due only for your credit card whichever you have used. The total amount will be like 30-40,000, and you will be paying the minimum amount due with the 45 to 50% rate of interest. Even though that amount is small, you will actually be paying a major component only towards your interest, and your principal will remain the same. In the case of a personal loan linked with a credit card, both the principal amount as well as the interest will be subsequently paid based on the EMI which you keep on paying every month. Always ensure you do not bounce any of your personal loan EMIs. Banks are extremely skeptical about personal loans and business loans because they are extremely risky and unsecure loans. Whenever you're giving an asset to the bank as collateral towards the loan what they are giving, banks feel a lot more comfortable because they have something as a holding which is of much higher value than the loan they have lended. So anytime you default on your payments, they can actually sell the asset and liquidate the amount and settle off the loan. But in the case of a personal loan or a business loan, they do not have any tangible assets which are given by you. So even if you miss one single payment, there will be extreme pressure from the collection agents for recovery of the EMI. So always ensure you take personal loan or use your credit card only when you are in extreme need and use them on a very short term basis. It should be ultra short term. If you are taking a personal loan, always try to close the loan within the same year or take it for half a year or not more than that. Any loan more than 12% rate of interest is considered to be a very high interest rate loan, and it is going to have a lot of impact on your financial stability in the long run. So is it advisable to go for a personal loan? We would say it's a 50-50% yes, because it is much better as compared to a credit card. Actual cash limit usage or a credit limit usage in a credit card, as compared to that one, a personal loan linked with a credit card is a lot better because it is half the interest rate as compared to a credit card. But it is always better to go for a loan which is against your collateral, something like a loan against property or a home loan, wherein the rate of interest is much less than 10% and your repayment tenure is given for a period of 15 to 20 years or even 30 years. Most of these personal loans or credit card loans are very short term. They'll give you a personal loan for a maximum period of 3 years or at max 5 years. So your EMI component will become very high. Assume you are a person who is earning about 50,000 rupees in salaries. Your personal loan of 5 lakh will make you pay an EMI amount of say 25 to 30,000 rupees, which is a very huge portion for your entire expense. So never go for a personal loan unless and until you are in need. And secondly, have an exit strategy. Always have a plan to close your loan within a finite period of time less than 1 year. Only then opt for a personal loan. I hope this video is useful to you all. And if you're looking for a credit card or a personal loan or any other sort of loan, you can always reach out to us by filling up the form mentioned in the description below. Thank you so much for watching this video. Looking forward to connect with you all in the next one.